Welcome to the channel. Today, we're diving into the intriguing rise of Bitcoin by 3.23%, a movement that can be attributed to a confluence of factors deeply rooted in both the macroeconomic landscape and the evolving dynamics within the cryptocurrency market. To begin with, the global financial environment has seen significant shifts that favor assets like Bitcoin, particularly as inflationary pressures mount across major economies. Central banks around the world, notably the Federal Reserve, have been grappling with inflation, leading to more cautious stances on interest rate hikes and even discussions about potential future rate cuts. Such monetary policies have traditionally weakened fiat currencies like the US dollar, prompting investors to seek alternative stores of value, with Bitcoin emerging as a prime candidate due to its decentralized nature and finite supply. This macroeconomic backdrop has been complemented by renewed interest from institutional investors, who are increasingly viewing Bitcoin not merely as a speculative asset, but as a digital gold that can serve as a hedge against inflation and economic uncertainty. Large investment firms and hedge funds have been accumulating Bitcoin, and this institutional endorsement has boosted confidence among retail investors as well. Additionally, the approval of Bitcoin exchange traded funds, ETFs, in various regions has provided more accessible avenues for investors to gain exposure to Bitcoin without directly holding the asset, thereby broadening its appeal. Technological advancements and developments within the cryptocurrency space have also played a crucial role. The implementation of the Bitcoin Lightning Network, which facilitates faster and cheaper transactions, has improved the utility and scalability of Bitcoin, making it more attractive for both investors and users. Furthermore, the broader adoption of blockchain technology by corporations and governments has underscored the potential of cryptocurrencies, with Bitcoin at the forefront as the most established and recognized digital asset. The integration of Bitcoin into the payment systems of major companies, coupled with growing acceptance by merchants, has further legitimized its use as a medium of exchange. This increased adoption has contributed to the rising demand for Bitcoin, driving up its price. Moreover, the recent volatility in global equity markets, exacerbated by geopolitical tensions and economic uncertainties, has led many investors to diversify their portfolios by allocating more capital to Bitcoin, which is seen as a non-correlated asset that can potentially provide higher returns. The geopolitical landscape, especially the ongoing conflicts and trade disputes, has heightened the appeal of decentralized assets that are not subject to the control of any single government or entity. Bitcoin's decentralized nature makes it particularly attractive in times of geopolitical instability,